did not land on the scheduled stream. Let's see if I can go in here and do that. My apologies. Let's see. Whoops. All right, well, I guess I am live on the TA side. That's good. To figure the other one out. Sorry, guys. I am still getting used to some of these streaming deals here. But hopefully you guys can hear and see me okay. I'm about to bring up the chat here. And okay, well, we'll figure it out in a second. Anyway, welcome. Today is Monday, April 6, 2026. Wild times in the market. And we're going to talk about what's going on, how to position ourselves, and what areas we think have the most opportunity today. Because this has been, as I mentioned, a very volatile period. We all know that, with the closure to Strait of Hormuz, the war with Iran. There's just a lot of events driving prices in all directions. And one of the main, obviously the main thing here has been crude oil. I mean, crude has just absolutely soared. We're holding steady in this kind of $60, $70 a barrel going into the start of the year, and it has essentially doubled since then. And that's putting a lot of stress on pretty much everything. We look at the overall indexes. The S&P 500 pulled back in a big way, at least compared to what we've seen the last couple of months. So we saw a almost 10% drop before getting a nice little bounce at the end of last week. And then over the weekend, Trump escalated things even further, as he tends to do. This one, and this is hard to even believe he did on Easter. But hey, he's Trump. You know, he plays by a different rule book. Has said Tuesday will be power plant day and bridge day. In other words, what he's doing is putting an ultimatum on Iran, saying we are going to make a deal in the next 48 hours or I'm going to blow everything up. And then he used some choice language in there and mocked Allah. And then it just came out maybe an hour ago that Iran apparently has rejected a ceasefire proposal made by the U.S. And they're really not backing down here. You know, they are, I think everyone thought that this would end fairly quickly. You wipe out their Navy, their Air Force, you blow up, you know, a good chunk of their military infrastructure, at least in terms of the uranium enrichment projects and some of their weapon stockpiles, and they are just not backing down that easily. And I don't think they're going to. And so obviously the market has not priced in escalation this week. If people really thought we were going to blow up all the bridges and all the power plants in Iran on Tuesday, the S&P would not be opening up half a point higher. So I don't really know what's going to happen. Now, big picture, is this going to have a massive impact on the U.S. economy? No. I mean, we don't do that much business with Iran. The only big impact of the economy is going to come in the form of crude oil, because that Strait of Hormuz, which they are currently holding closed, is where 20% of the global oil supply flows through. And most of you have probably seen this already. If you have not, let me just give you an idea of the picture here. So here we go. No, that's not the one. If I can find a better picture. There we go. So this is the Strait of Hormuz. This little tiny area right here, that orange font. But what happens is all the crude oil that comes out of Syria, and well, maybe not Syria, but Iraq and Kuwait and Saudi Arabia and Qatar, all this oil in the Persian Gulf has to get out to the rest of the world. And some of it goes through pipelines. That part is still getting out. But they cannot They don't have the pipeline capacity to send all their crude out via pipeline. A big chunk of it is piped here to the Persian Gulf, gets put onto tanker ships, and those tanker ships go out of the Persian Gulf into the Arabian Sea, out to the rest of the world. And a little 21-mile wide gap right there is the Hormuz Strait, which, of course, borders against Iran. And so what they have done is say, you're not going through, because there's nothing they can do militarily to threaten the U.S. The only thing they can do to hurt the U.S. is attack us economically. And when you put a chokehold on 20% of the world's global oil supply, which is already a fairly fragile system, you get this supply-demand imbalance. And prices for physical crude soar. We've seen Brent at $130, $140 a barrel. It could go to $200 a barrel. And so to me, they're kind of playing their only card. But anyway, that's what's going on, and that's where all the questions about what's going to happen, are we going into recession, et cetera. That's. Oh, you're not seeing the map. I'm sorry. I'm sharing an application. Hold on. Sorry about that. There it was. Okay. Sorry, guys. I forgot I did the share. Okay, there we go. So this is the Strait of Hormuz, right there, that little orange. All right. And so as you can see, I mean, Iraq, Kuwait, Bahrain, Saudi Arabia, Qatar, all that oil that's pumped to the Persian Gulf gets into big carrier vessels there through that 21-mile wide Strait of Hormuz, out the Arabian Sea, and then out to the rest of the world. And that's what they're controlling, that little area there. And it's really the only card they have to play. All right. So that's where all the turmoil comes from, and just a speculation of what could or could not be. We thought this would be over quick. It's not going to be over quickly. Now, we're seeing a couple other things from this. A lot of the helium, global helium supply comes out of there as well. Energy prices being up. It's affecting fertilizer. It's affecting gasoline. It's going to hurt the companies that have massive transport costs, et cetera. So there's just a lot kind of going on there. But there are some areas that are doing very well. And this is our industry strength indicator. Now, if you're not familiar, this is something we had coded to show us which areas of the market are showing the greatest amount of strength. And so what it does is look at the top 40 sectors and subsectors of the market and show us which ones are going up the most over 1 and 2 and 3 and 6 months. And the idea here is fairly simple. The large multi-billion-dollar institutions that drive stock prices and drive markets, whatever they are buying in mass is going to be rising. Whatever they're selling in large sizes is going to be falling. And so if we can keep a laser focus on the areas that are performing the best, the ones that have the wind at their back, consistent buying pressure, the areas with true alpha, we know exactly where to focus. And so what you'll find is that in bull markets, every bull market, in fact, is going to have a leading areas or a leading theme to that market. And sometimes this is crystal clear. Sometimes the number one performer is the same on 1 and 2 and 3 and 6 and 9 and 12 months, and it's super easy. Right now, obviously, some things have flipped around. Energy prices have soared in the last 6 weeks, which has brought energy and natural gas way up to the top of these lists. But when things are normal, and they will normalize again in probably the next 3 to 4 weeks, I believe we'll get a clear picture. But I think the energy trade is going to remain hot probably for the rest of this year. This is not something that can quickly be adjusted. All the crude that is sitting out there in vessels in the Gulf, they've pretty much depleted the bulk of it. There's kind of like think of it like their pantry, right? They're drilling crude out of the ground. They're putting it into ships. They're shipping it across the world. It's then being pumped into refineries, and it goes out, et cetera, et cetera. Just like you go to the grocery store, you buy, I don't know what you buy, corn, wheat, oat, canned food, whatever. It goes into the pantry, and then as you run out in the fridge, you put it in the fridge, and you pull it out of the fridge and eat it right. The pantry's running dry. And we had a bit of supply, but to refill that's going to take some time. And so I think the energy trade is going to stay hot. But what this does is, again, tell us where to focus our efforts. Now, for the last 12 to 15 months, the theme's been very clear, and that has been metals and energy. And again, this is a bit skewed right now because of the big runs in energy. But, you can see energy, natural gas, nat gas, energy, nat gas, energy, natural gas, energy, and then the metals, right? The rare earth metals, the miners, the mining and metals space, solar energy, lithium mining and metals, gold, uranium, metals, right? That's been the theme. And again, up until 6 weeks ago, mining and metals and gold miners were up here in all of these lists. It's just they've fallen back a little bit thanks to the big run in natural gas, energy, and shipping. But this has been the big theme, and so that's really where we want to focus. And for 2023 and 2024 and a lot of 2025, the theme was AI. It was the big semiconductors. It was the tech. That was the play. After COVID, it was the work from home theme where you saw your Zooms, you saw your Pelotons, you saw your all those stocks that benefit from the work from home theme. What we have right now is a big energy crisis. We have massive increase in demand from these huge AI data centers going up all over the country, but all over the world, but especially in the U.S. We have now a big disruption in the crude aspect of that energy driving prices higher. And so there's just a big rush into this energy space. The same thing is true with the metal space. We know that gold and silver and the precious metals made a really good run last year. But we're starting to see it across the board in terms of things like copper and nickel and steel and all the industrial metals that go into all these big, trillion-plus-dollar infrastructure projects. And so I think, and I've been feeling this way for 8 or 9 months, that's why I'm positioned accordingly, have done pretty well. Investors are getting a little iffy on the AI trade. We're saying, all right, your NVIDIAs are trading at really high multiples. Your OpenAI, which does not even make money, still loses billions of dollars, is trying to go public at $1 trillion. All the big AI startups, and you're taking a massive risk paying $1 trillion for a company that is still losing money. You're making a very, very, very bullish bet they're going to execute extremely, extremely well going forward. And the only way that really continues is if all the assumptions we've made to get there come out true. AI grows as fast as we think. Consumer adoption is as good as we think. Interest rates stay as low as we think. But crude has thrown a wrench in this because as crude prices go up, guess what else goes up? Inflation. Because the energy price obviously is part of that CPI, the Consumer Price Index. The energy it requires for farmers to run the tractors, for transportation companies to move the grain and the meat and the cows, et cetera, all that drives up. And so you feel that throughout the economy. Every company, at least most of them, have some, if not a lot, of exposure to the energy sector. And so now the new base case inflation, we're probably looking at 3 to 3.1%, which is well above the Fed's long-term 2% target. And when that is the case, they do not cut interest rates. In fact, if anything, they raise interest rates to try to tame inflation. And the market does not like higher interest rates. Now, by the way, I've seen a couple of questions on this. If you are not already a member of our Black Ops service, click the link in the description or just go down there to tradewithross.com. For $5 for an entire year, you'll get these live weekly sessions. Now, right now, I'm doing it on YouTube. We got a strike doing these on YouTube 6 months ago. I have no idea why, but if that happens again, they'll go back to Zoom. We have another Thursday session with my top analyst that is over Zoom only. It's just for members. You'll get access to this industry strength indicator. You'll get my weekly newsletter that goes out, as well as bonus reports and access to our support team. It's a ton of stuff. It is just $5 for the whole year. No strings, $5. Not getting rich off this. It's as cheap as we can possibly do it. So if you're not already a member, go to tradewithross.com or click the link There should be a link in the description. If not, just go to tradewithross.com to get signed up. Okay. So anyway, that happens. Inflation goes up. They can't cut interest rates as we thought. If they can't cut, that makes lending and borrowing costs high. It just trickles down. Everything's kind of connected here. And so that's why we've seen this sell-off in the markets, is that it's pricing all this in. So we are now open, we are 13 minutes from open. Now, stocks somehow are up on the day. Despite this, from POTUS, we're up. So people obviously know something here. Maybe this is going to come to a halt quicker than I thought. I don't know. But a couple of things we're seeing pretty clearly right now. One is the energy trade. Space also getting really hot. And this is one because of the SpaceX IPO expected this year. Talk of that. We also had NASA launching to the moon for the first time in 50 years. How does that make them more money? It doesn't. It just brings attention to the space sector. And so if we take a look at some of these space stocks, I got a lot of them here. We're seeing some big moves. I mean, Planet Labs tacked on 17% on Thursday. Rocket Labs trying to base out here after pulling back from 100. ASTS, this is EchoStar. If you remember, I did a YouTube video a few weeks back talking about ways to buy the SpaceX shares in SpaceX before the IPO. One of the backdoor ways is this stock, which holds a big treasure trove full of SpaceX stock. They got it from some bandwidth deals they did. So instead of paying cash, Elon just gave them equity in the company. That one's doing very well. Viasat tacked on 18%. Garmin is trying to come off the lows. Sirius actually looks very good here. This is a stock that's been in a massive stage 4 decline. It was back. Notice it kind of chopped in this kind of 20 to 25 range, stage 1 for all of 2025. It is now finally trying to break out through these levels here. And I'll turn the moving averages off just to make this cleaner. But notice how we're beginning to see that kind of shallowing, tightening, compressive action. It then breaks out Thursday on above average volume. It's exactly what you want to see. So this is beginning to look very, very strong here. But how many of you guys are joining for the first time here? Because if you're new, you need to understand that breakout pattern we look for. And I'll give you a quick example of this. I saved some. I like to share like a really clean, super, just textbook example so you can see what it is we're looking for. Here's a good one right in here. So let's go back in time. This is Rush Street Interactive. And I just want to show you this really quickly because I want you to understand how to identify when and where to buy these stocks. Okay? So what we're looking for to get us into these stocks. Actually, let me just do a different one. Sorry. There we go. This one's really clean. All right. What we're looking for to tell us when to buy and sell a stock is an entry point where we can risk a small amount of money, generally 10% or less, and then potentially make a large amount of money, 30, 50, 100 plus percent. And this is the pattern we want to see to do that. All right. And our goal is to buy right there. Right there at 13.5 is breaking out. So what is this pattern we're looking at? Well, again, you got to understand what moves stock prices. And it's not you and me and little Jimmy Smith down the street. It's Goldman Sachs. It's State Street. It's Warren Buffett's Berkshire Hathaway. It's the Fidelity Magellan Fund. It's the Notre Dame Pension Fund. It's the 30, 40, $50 billion fund, right? They're the ones really moving stocks. Not because it's manipulated, because they're buying tens of millions of shares compared to us buying 200 or 300 or 1,000. And so what we want to find is, where do we have an edge? Where do we have a window we can buy and get outsized upside with limited downside. And so here's the pattern we look for. So first and foremost, we want to see a stock that is going up. I know that sounds simple, but you wouldn't believe how many people once upon a time heard buy low and sell high and interpret that as it needs to be way lower than it's ever been. And that's just not the case. If you go back and look at this stock and you bought it right there where I drew that arrow, well, you did buy low and sell high compared to where it's going. So you don't have to buy 50% off the highs it's been. You can buy high and sell higher. All right. So going back to this, you want to see the stock making a big run because that shows there's institutional buying. The only way for a stock to go from 8 to 13 in 2 months, right? What is that? A 65% run is if large, big institutions are buying. You and me aren't moving TrueBridge 65% in 2 months. I don't care if you liquidate everything you got and put it all into this stock. You're not doing that. But if you're trying to build a $500 or $800 million position, you could do that. So this is good. We want to see the stock rising. It means there's demand for the stock. But here's where we come in with a scalpel, with laser precision, okay? Once a stock is up 50, 60, 100, 500, whatever it may be, there's going to be a lot of pent-up supply. There's going to be people ready to sell and take their profits. I'm going to be one of them, heads up. And when people take profits and they sell, that generally pushes the stock down. Now, if this stock is in fact still in demand, if these large multi-billion-dollar institutions are still buying day after day, week after week, they're going to take advantage of that and drive it back up. You may see another little wave of selling and they drive it back up. And there may be a stock downgrade. There may be an earnings beat. There may be some kind of spoofing order at low volume times. But what happens is it forms this shallowing pattern on the chart. And when I say shallowing, all I mean is the pullbacks are getting less and less. So if we kind of measure them here on the chart, notice how this pulls back about 11.5%. This next one here from peak was, around 10%. Then it was about 7%. Then it was, 4, 5%. See how they're getting shallower and shallower? What's happening is that supply, the amount of stock available to buy, is being sucked out of the market. And there's simply fewer and fewer people selling. That's why it falls less and less. If everybody wanted to sell this stock instantly, it would fall 90%, right? If a third of the people sold it, it would probably fall 40 or 50%. If 5% of holders, it would fall 10, 11, right? And the fact that the dips are shallower and shallower show you there is less and less and less selling. And you got to figure, if you're a big institution, your goal is to build a 100 million share position of TrueBridge, you're going to be buying every day, every week for probably 2-3 months. And you're going to keep buying and keep building that position until eventually you run out of supply. There are no more $11, $12, $13 shares of TrueBridge. Everyone you could shake, bore, or scare out of this stock has already sold. The rest of these shares are sitting in 401k accounts, in mutual funds, in ETFs, they're treasury stock. They're just not for sale. And so eventually, if these big institutions want to keep buying, they have to pay up. They have to say, all right, would you take 14? Okay, we'll pay 15 or 16. That is how these stocks make big, strong moves very quickly like this. And if you look down here at the volume, let me drag this up so you can see it. Whoops. Not what I meant to do. If you look down here at the volume, and if you're brand new, these volume candles down here on the bottom just shows you how many shares traded that day. So this big one was about 160,000. This was 80,000, right? But look at this. Now, in October, okay, right over in here, let me clean this up a little bit because this is a really important point to make, especially to you new guys. over here in October, the stock really went nowhere, right? We can all agree on that. It traded in like this, 10, 13% range. And this is how many shares traded each day in that month, right? Now, look in November. In November, the stock went up 40%. We're talking about this time period here, okay? And I want you to compare the volume in October, to the volume in November. I didn't draw that very well. But this area here versus this area here, okay? Now, was it massively higher in November? No. I mean, there's just one day that was a bit higher, but it's not as if trading volume just soared over here. People just came in buying hand over fist. So you're going, all right, well, if the same number of shares traded hands in October as November, how the heck did it chop around in a 10% range in October and it went up 40% in November? Very simply, that same amount of trading, the same amount of demand and buying was chasing a much smaller pool of stock. Same demand, much less supply. You had 100 people trying to buy 100 shares, they're going to stay right here. You had 100 people trying to buy 5 shares, they're going to have a bidding war and it's going to go up. That makes sense? And nobody seems to think about stocks in terms of supply and demand, but that's all it is. It's no different than eBay or any other auction. And so that's why our goal is to wait until supply shrinks. When there's clear signs demand is there, but supply is shrinking, the available stock for sale is dwindling, and then when it breaks out, when it gets above this resistance line here, I've drawn a star where the stock can't get above, that's when you want to buy. And that's when you've got the greatest chance of making a big and fast gain very quickly. And on top of that, you don't need to risk a lot of money. Because this is a shallowing pattern, because this dip was less than this dip, and this dip was less, because it gets shallower and shallower and shallower. It should not go beneath that most recent swing low. And so once it tightens up here and then it breaks out, you go to the low of the last little tightening, which is where I've drawn this red line. And that becomes my stop loss. You place an order that says, hey, if and when TBRG falls to $12.60 a share, sell it instantly. That's where I'm wrong. I've made a mistake. So if I bought the breakout here, my stop loss is there. I've risked a whopping 6.6% on this trade. And I'm up 40% in 3.5 weeks. And if you're risking 6, 7, 8, 10% to make 40, 50, 60, 70, how far does this one go? A lot further. That's a double in 3 months on a 6% risk. Okay? So there's lots of ways to skin the cat. I'm not telling you there's not, but listen, if you've been following people saying we need this Fibonacci retracement indicator and this double super secret squeeze nonsense, and you follow somebody got 87,000 lines and dots and squares and dancing chickens on their charts, they don't know what they're talking about. They're trying to look fancy, but there's not a single indicator on this chart. And if this was a leading stock in a leading group in a strong market, I'm buying this stock in massive size on that breakout. Okay? And if you'll stick to this, if you'll stick to the leading groups, the areas with wind at their back, focus on the top 10 or 15 stocks in each one of these groups, and you can just Google this. Just go to, if you want the top space stocks, here's what you do. You go to Space ETF, look at their holdings, add them to a list, and then you just look for this pattern. You look for periods when the thing is up, it's consolidated, price action is tightening, and you buy when it expands, when it comes out. And yeah, if y'all are asking about the chart, I mean, candles look like this. I prefer a bar chart. It's just cleaner to me. All right, so let's see what's hot right now. Now, space is lighting up. Energy obviously very, very strong. So let's see what we can find in there. Space sector Shipping, I'm not betting too big on. I had a little spike in here, but let's just see what we can find. So I've gone ahead and made some lists here, and we'll go through them and see what kind of opportunities we can find, all right? So this is my list of, I think it's 22 different space stocks, companies with exposure to the space sector, Planet Labs being one of them. Now, we just covered that breakout pattern. And I'll agree this one's not dead on perfect, but do you see a good buy point, two good buy points here in Planet Labs? And I'll show them to you right now. And yes, somebody asking, I do try to cover that basic breakout strategy really quickly at the beginning of each one of these sessions. We have new people joining us each week, and if I just go in and go, they're not going to know what the heck I'm talking about. So I apologize if people have been here a while. But look at Planet Labs here. Do you see that same kind of pattern? Massive run from $2 to $5. Some profit taking. Now, it got a little deep in here, but it comes up, tightens nicely. There's the breakout, and it goes from 470 to 670 in about a week and a half. And in fact, there was another one over in here that was even prettier. This is a textbook breakout pattern back over here. And this doesn't have to happen to the highs. I prefer it to happen to the highs because that's when there's no supply above. But after a big dip, you'll get the same thing. This thing goes from 3 to 180. It's got to absorb that supply. It does so. It tightens. It compresses. It breaks out. What on earth is going on here? Okay. And then it just explodes higher. And then it went in, formed that second pattern we just looked at, tightened up, and exploded again. So this looks very, very strong. Now, do I want to buy it today? No, it's a bit extended. I want to see it absorb some of the supply. So it just went from 26 to 36 in a day. There's going to be some people who want to sell. There's all these people who are trying to get at a break even. So if it would do something like this and tighten up for a few days, get ready for its next run, I'm all over it. PL seems a bit extended to me today. Rocket Labs. Little squirrely. Doesn't quite look ready. But if it would come back in and tighten up against this kind of 78 resistance, in other words, if it would, show me there's buyers, strengthen up, firm up like that, I'd sure buy this on a breakout. AST Space Mobile, let's put our moving averages back on. And these are very, very volatile stocks. So you want to be really careful with these. This is not like buying Apple or 3M. These are stocks that are no revenue, or minimal revenue, most of them no profits, pure speculative plays based on assumptions and bets and hopes for the future. I like the bounce here. Notice how it dropped, 26%. And then in 1, 2, 3 days, all the way back up. And again, we just have to think about who's doing the buying. We want to follow institutions. We want to follow the firms that are trying to build billion, $2 billion, $3 billion positions in AST Space Mobile. And if that's them, if they're buying it up, that's what they do when it dips. They buy the heck out of it. They take advantage. And we call this tennis ball action. If you drop a tennis ball, it bounces. That's what we want to see. If you drop an egg, it just splats. And that's the ones we want to avoid. But I think there's better. Let's see. Echo Star. I think Echo Star is buyable right here. I think it looks great. I know I recommended it a couple of weeks ago. It's up from there. But from a technical standpoint, you've got this really clean. I mean, you see that kind of shallowing effect there? It's basing up and tightening. See how we couldn't get above 125 and 125 and 125? And then we blew through here on Thursday, and now it's gaining. I think it's buyable. You want to buy some? We can buy some. Let's see. Now, I think low a day Thursday stop would work. It's going to be about a 9% risk. There is a little bit of supply, which I don't love. Notice how here in January, the highest this stock got was like 128, 130. So we do have some trapped buyers who've been underwater this whole time. Does it look like a descending wedge? Not to me. I mean, a descending wedge looks like this. The price action is tightening along the bottom. An ascending wedge looks like this, where price action is tightening toward the top. That's what I want to see. This to me looks like a pretty flat base. You know, it's not really, it's pretty flat with a little bit of tightening up here, you know, toward the end. And it's pushing here into, this is the only thing that scares me, is this supply in here. So I would not be surprised if it kind of stalled here for a few days before getting legs and running higher. So it's not perfect, but it looks very, very good. It's sitting at all-time highs. I mean, it could pop through 129, 130 here in the next 30 minutes and be off to the races. I mean, there's plenty of momentum on these space stocks. But right now, it's kind of stalling here. Let's go into a 5-minute chart. Ah, man, I should have bought this. I wish I'd have seen this. Okay, that was end of day. Now, look at this on a 5-minute chart. This will really help you out. Some of you are day traders, or you want to be. You're like, I don't want to hold this stuff for 3-4 weeks, Ross. I'm not letting Trump's tweets move my stuff around. All right, you want to be a day trader. That's fine. Do exactly what I just told you to do, but look at a 5-minute chart. Still stick to the leading groups. That's where the money's going. Still stick to the leading stocks, the ones going up the most, and use that exact same pattern. Only instead of going up 40 or 50%, it's going to be up 4 or 5% because this is a short-term chart. All this happened in one day. But do you notice that exact same little dip and then boom, spiked right back in? There's your buy. And on this one, again, you're day trading. So you're going much, much bigger size, much less risk. You risk 1% and you made 2.5 in 10 minutes. So this will work on daily, on hourly, on weekly charts. You want to use all the same principles, okay? Because you're just exploiting supply and demand. Let's see if there's anything better. I like sats. I want to see if we can Viasat. Now we're talking. Well, that's breaking out to new highs. Man, I mean, what a strong day. 18% on Thursday. Just incredible. But again, look at the shallowing. This one is kind of ascending up. But do you see how shallower, and then boom, right? I mean, do you see how these pullbacks go from 35% to 26% to 17%? This one didn't tighten up much. About the same 17. I like it to get to like 10 or less. But again, these are very, very volatile. This is a stock that's up 500% in under a year. So heads up, it's going to be a bigger mover. But you see what I'm saying? Like, even if it's not a perfect chart, you want to see that same compression of price action. You want to see it getting tighter, not wider. And think of it like a coiled spring. You want to see it pressing, and then you want to buy as it releases that energy. Okay? That makes sense? 5-minute chart. Can you see those everywhere or special? I have to add it. You can see that anywhere. I've got to save to my favorites. But if you're using TradingView, Tabby, just hit this little arrow up here, to chart interval, and see you've got minutes, you've got hours, you got days, week. The ones you want to constantly show up at the top, just put a star next to it. So, for example, if you look at mine, if I put a star there, see how 1 hour popped up? If I take the star off, it goes away. So just star the ones you want to keep favorite. But yeah, that way you can switch right back and forth between them. 30-minute, daily, weekly, put monthly on here if you want. Garmin, pretty choppy. Sirius, I think good. Big picture. You're coming out of a stage 1 base. Maybe a little early. No. Still wide. Now, it's starting to, it's trying to tighten up in here. Notice that for the last 6 months, it's been kind of forming this base off the lows. Now it's a deep one. I mean, it's a 50% dip. Getting a little lighter. What do we want to see? We want to see it kind of do this. And it may or may not. I'm not saying it's guaranteed to do this, but for me to get in and have an actual edge on this stock, this is what I want to see. I want to see it continue to tighten, showing me the supply continue to get sucked out of the stock. I wanted to keep pushing to these highs, showing me demand is still there. And then I want to buy it when it breaks out here. I want to stop loss in there. I'm going to risk 10, 15% on a stock that should and could run 100, 150. And you're allowed to be picky. There's 6,000 stocks out there. There's an extremely volatile market that swings trillions of dollars based on the tweets of a guy in the middle of Iran or Donald Trump in Florida or DC, wherever he is. It's extremely unpredictable right now. Be picky. And people think there's like these rules that are always going to work, and this is what's going to do, and you're going to make $2,714 a week every week. Anyone who says that crap is lying. There are times when conditions are ripe and it's easy. And if you do what I tell you, you'll make a mountain of money. There are times, like right now, when you're in the middle of a war and inflation is rising and interest rate cuts are uncertain. And, it's just tougher. And so your options during those, I'm just going to put it to you bluntly. Your options are trade very, very small, keep your risk low, just stay involved. Take a month off until things calm down, or go much shorter term. Start trading 5-minute or 30-minute charts. Look for stuff you can hold for a couple hours, a couple days, instead of a couple of weeks or a couple of months. Those are really your options. Lunar looks strong. Man, what a move. Iridium Communications. Wow. Really, really wild. Voyager looks terrible. Boeing, Lockheed, L3. These are all defense companies. Exposure to space, but not clean space plays. Black Sky trying to tighten up. Still pretty wild. Red Wire. Let's look over in energy space as well, because that's obviously hot as well. A lot of these stocks got extremely extended. Let's see if we can find some look better here. Let's see. Okay. Exxon, you could probably buy here on a pullback. I'm guessing it's sitting on about the 20-day. Yep, right there on it. So, again, look at Exxon. You'll see that exact same pattern I've been talking about all morning. How it comes in and it shallows and it tightens, right? See that? It breaks out here, makes a big run, and then eventually didn't tighten too much, just barely a little bit here. Tightens up, breaks again. Now you're pulling back on a retest of that breakout area, sitting on the 20-day moving average. So if you want to do a pullback in energy space, Exxon looks good. CVX looks almost identical. Conoco's just see how extended these are? Like they're up 40, 50% in the last 4 to 6 weeks. When you get up that much, you run the risk of doing this and having a big pullback in there. So you can either wait till they compress, like Schlumberger is doing, or just buy the dips. And stocks moving strong like this are probably going to stop at the 20-day moving average. That's going to be your buy point on pullback. So like I think you could buy all these today if you're still bullish on energy. Nice little pullback here on One Oak. So notice how you came through the 200, compressed, shallowed, textbook breakout. Then now you're getting a retest right here. Occidental just won't quit. Kinder Morgan finally starting to consolidate. Good. Diamondback, Halliburton, Baker Hughes. Baker Hughes getting a little wild. Dev Energy looks great. Targa Resources kind of beginning to tighten up and consolidate in here. Terra, EQT, that looks terrible. Appalachian. These have been really tough because this was obviously a geopolitical shock to energy. It was not that super technical setup, although, in hindsight, these did look pretty good in here. But I don't think anyone knew it was going to be this far, this fast. And when you got oil at 115, 120 bucks a barrel, you're buying into some pretty rich valuations. And if Trump even lies, sends a tweet, hey, we've reached a deal. We're gonna have a ceasefire next week. If he's making it up and it's some kind of psychological warfare, you'll see oil fall from 110 to $80 in about an hour. By the way, guys, if you're just joining or you haven't already, if you're not yet a member of at least our Black Ops membership, there's a QR code down at the bottom of the screen you can scan. You can also just go to tradewithross.com. It's $5 for the whole year. We do live weekly sessions every Monday, another live session on Zoom or on Zoom only every Thursday. You'll get access to our industry strength indicator for life. You'll get my weekly newsletter for the entire year. You'll get access to our support team, tons of stuff. It's the best $5 you'll ever spend. All right, give me some stocks. Let's take a look at what you got here. I've been looking over them. Let me just see what you got. Let's do some rapid fire here. Redwire. Yeah, Redwire, it does look like it's trying. It's still pretty volatile. You know, you just came through a 46% drop, which you should not see if there's institutional accumulation. So hopefully it continues to tighten up in here and gets legs. It's still a little bit wild for me. BW, Babcock, perfect. Love it. Yep, looks fantastic. Not in one of the big leading areas, but still the stock is too pretty to pass up on. Fossil. Oh, yeah, it is. Fossil renewable power generation equipment. Okay, yeah, perfect. Yeah, looks great. I mean, I would rather have an average setup in a good stock and a good group than I would a fantastic setup in an average stock in a poor group. Is this a perfect setup? No, but like you don't need it. You had the big move. You got your shallowing. It comes in, tightens up, did it pretty quickly. Now breaking out. Beautiful. Buy it right now. Stop either low of the day if you really want to give it some room. Put it down here to risk 17%. I think low of the day ought to do it. Risk 7 or 8%. This thing's going to run. It shouldn't take out the low of the day. Yeah, looks really good. Another stock I was looking at over the weekend. I should bring this one up to you. And then I'm going to look at some more of yours. Booz Allen, BAH. And the reason I like Booz Allen, they are a consulting firm, but they consult for the federal government. 97% of their revenue comes from DOD and federal government agencies. And they so embed themselves in these big defense contracts, the government essentially cannot operate without them. Trump just proposed a $1.5 trillion defense budget next year. He would take the largest defense budget on planet Earth and increase it 50%. Now, I'm not a master of warfare. I don't know. It just seems like a colossal amount of money. These guys are going to get a big chunk of it. And you look at Booz Allen, and this thing had been on a perma trend from 36 to 200 up until late 2024, and then it just collapsed. Now, I need to dig into it. I don't know all the fundamentals on Booz Allen past what I just told you. But if this thing finally comes down and bases out off the lows and turns around, you've got a stock that could be well on its way to $150, $200 a share, currently trading for 80. And if I look at this thing tight, it's still below the 200, so it's not perfect. But notice we are starting to see, albeit a micro one, right? This is only over about a 6-week period. But we're seeing a pretty good little consolidation in here, and now it's trying to break out. Now, again, big downtrend, lots of supply up in here. It is in no way perfect, but I am keeping an eye on this, because if I can get a little piece, in fact, you could really buy it here, risk 7%. If this is in fact the low, and you spot the low of the phase one or stage one base, you got a lot of upside in front of you. But anyway, just wanted to keep on your radar. All right, CMRE, Costamare, beautiful. Yes, love it. Shipping company, very, very strong. You know, you've got, it looked like it tried to poke out here in March, didn't quite have the strength to do it, but just what you want to see. Big, strong run up, nice, clean consolidation coming here. Yeah, looks wonderful. Love it. Great pick. Good job. EHC. Not one I would buy. Everything about it says downtrend. You've got a 5% up gap this morning, but one, this thing is very, very gappy. Is it a non-US stock? No. Headquartered in Birmingham. Oh my God, it's 2 hours from me. Yeah, this looks abysmal. I don't know anything about it. If you have a fundamental reason to buy it, okay. But I mean, it's Not the kind of stock I'd want to buy. What do you think about Fly, FLY? Yeah, I like the business. This is the in the right sector. Still a small cap stock. What are they? 5 billion. So I guess they're a mid cap stock. Um, it is trying to form that post IPO base, and this is by far the most lucrative place to buy a stock in its life cycle, because if you can get the first post IPO breakout. And most IPOs, initial public offerings, like when it begins trading publicly, which happened here, most of them look exactly like this, because the venture capitalists, the early investors, the founders want to make as much money as humanly possible for themselves. They bought it when it was worth $1 million, 10 million, 100 million, whatever. Now they want to get that valuation as high as they can. They want to get as much as they can for stock. And the underwriters help them do that, right? You are their exit liquidity. It's why I almost never, ever buy IPOs. And so they put some crazy price on it. It comes out here and goes public. And then everybody just sells the ever-living you-know-what out of it, because it's massively overvalued and not really worth that. And the underwriter slipped this thing through. And so you'll get through this. The market, this is what's known as price discovery. The market is kind of trading buyers and sellers, trying to come up with what this stock is actually worth. And then eventually, it comes in and forms a base here off the lows. And not always, but ideally, if I see it do exactly what we've been talking about today, and kind of come in and absorb, and you see that's all that supply, hundreds of millions of dollars worth of stock supply, needs to be absorbed. And until it falls to a price that begins to get attractive, and big institutions begin accumulating that stock off these lows and buying it up until they've got as much as they can, then the stock can break out here and begin the real long-term run. And it will generally do something like this, and then off to the races. And this is going to be the next Google. It'll be at 7,000 a few years now. But I call this the pump, dump, and run. It's what most IPOs do. They get priced here, get the initial pump, and sometimes it'll run for a day or two. You get the big dump, and then it bases, and then it starts the real run. So that's what I see with Firefly. It'll probably play out like every other IPO does. TVTX. Yeah, it looks okay. I mean, it's a biotech, I'm assuming. Young mid-cap company trying to come up off the... I mean, it's a lot of strength. Another 8% today. It looks like it's got the strength. Is it a nice, tight, clean pattern emerging from? No. I mean, I guess you could make the case for this little ascending wedge. Although it was really a descending wedge. It looked like it was going to break down to me. Look, I have nothing against it. Is it a great buy point right now? No, but it does look very, very strong. All right, a lot of stocks here. Let's see. EWZ. Yeah, I mean, I still love this. I own it. This is the Brazil ETF. I took half my S&P 500 retirement dollars and put them into this. Just so you know, if you missed my video, this is the Big 40 in Brazil. This is like the Dow 100 in the U.S. This is their version for Brazil, but this is a resource-rich country. And their stocks trade at an average of 8.5 times earnings. U.S. index trades at about 22 times earnings. Now, the U.S. carries a premium. This is normal. That may stay, but you're getting a lot more bang for your buck. You're not getting the big, bloated, multi-trillion-dollar AI stock exposure. You're getting additional exposure to energy and metals and natural resource and commodities, the things I'm extremely bullish on. And look at that trend, right? Every dip to the 50 gets bought. It's been in a beautiful uptrend for the last 15 months straight. After years of underperformance. And I think over the next 2, 3, 5 years, I think other countries' markets are going to outperform the U.S. It's not like a bearish thing on you. I don't think the U.S. stock market is going to collapse. I just think we have very high stock valuations. In other words, stocks have gone up a crap ton the last several years. We have interest rates that are probably not going to go much lower, if any, because inflation is going to get worse. And, the macro picture just says these guys are out there sitting at 15, 16, 17% interest rates. Their rates are about to get a lot better. Their stocks are trading at a third the value of ours. They have tons of commodity exposure, which we're all bullish on because of inflation. So, to me, For my money, I'm not telling you to do the same. This is a better play, and it looks great. So, yeah, I still like it. STX at Seagate, excuse me. Yeah, looks great. Gap and run today to new highs. Perfect. Didn't stall at the highs. It looks like it's off and going. I'd put a stop at the low of the day and let this thing trade. Whatever the news was that gapped it, needs to be paying out. And look, you see that pattern? See that big doubling in here? Do you see that shallowing on the chart? I'm not trying to Monday morning quarterback the market. I'm trying to burn this image into your retinas so that when you see it in the future, you will not hesitate. All right? It is the most reliable setup you will ever find as a swing trader, at least in terms of risk reward, win rate, etc. YSS, York's Space System. This one I don't know. Got a new space stock. Let's add it to the list. Whoops. Okay, this is a new one. I wouldn't wear this one. I like this. I like it. See, y'all know more than me a lot of the times. What do we got? Aerospace and defense, $3.5 billion. Comprehensive suite of mission critical solutions for national security, government, commercial, blah, 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 headquartered in Denver. Okay. It's only, 7-8 weeks post IPO. A little early for me. It went up big Thursday along with every other space stock. I would love to see it. The soonest I would buy this would be if it would stall in here and give me a little bit of a absorption base. It fell. What did it fall here from IPO? 56%. That's enough. It needs to fall by at least half. Man, this probably would have done beautifully if it weren't for that big up day. Yeah, it's early for me. But look, if you're trading this, if you see something on like a 5-minute, all of them, as soon as that space mission went well Thursday, just boom, off to the races. Looks interesting. Uber. Man, I hate this company. Yeah, nope. Nope, doesn't look good. So we highlighted this little support level back here in December and said this is where it's got to hold, and it hasn't. And, if you look at Uber, what's the story? Well, the stock market's 7-8% off all-time highs. Uber's 30% off. The 20 is below the 50, is above the 200. Their long-term 200-day moving average, not only are they below it, has turned downward. So short, medium, and long-term trends are down. The stock has poor relative strength. So it is being outperformed over the last year by 70% of the overall market. Now, this is not a judgment on the fundamentals of Uber. I'm not saying it's not going to be worth something down the road. I'm not making any fundamental judgment whatsoever. I'm telling you that from a technical standpoint, just looking at the buying and selling of investors, people are selling the stock. And until they think it's a deal and start buying, it will continue to go lower. I would look to short this stock on every touch of this dash 50-day moving average right here. Let me turn the 20 on to simplify this. The 50-day moving average typically is support for a stock in an uptrend and resistance for a stock in a downtrend. So if you have a good stock in stage 2, leading, healthy uptrend, leading group, we have often bought on the dips to the 50. If you have a stock in a downtrend that is underperforming in a weak market, you want to sell the rallies into the 50-day. That makes sense? So nothing about this chart says buy to me. Literally everything I want to see paints exactly the opposite. Not a leading group, not in an uptrend, moving average pointing in the wrong direction, stocks below the moving averages, series of lower lows and lower highs, 50 days of resistance instead of support. This is a textbook short setup. It change any day. Again, not trying to pee anybody's Wheaties this morning, but right now it doesn't look good. All right, NPK, let's fire them off. National Presto Industries, aerospace and defense, nice consolidation. Yes, hard yes. Looks perfect. Love it. Had a little peekaboo incident on March 10th. It tried to run a little too far, a little too fast. But again, the markets aren't perfect. That happens. But nice consolidation. Holding that 50-day, as we mentioned. tightening up here. Uptrend in space stocks. Beautiful. Love it. Perfect pick. Who picked that? Loose. Yes. Good job. LUC Downey. Y9. Oh, I don't know. I don't know what to call you. Loose? Luck? Lucy? Lucifer? I don't know. Okay. Micron. MU. Just kidding on Lucifer. Didn't mean that one. No on Micron. Rolling over hard. Blowing to the 50-day. Big, heavy selling volume. Don't love it. Did you mean Meta or MUTU? Meta looks absolutely terrible. Why? Because they bet big. They got massively overvalued in here. Their $80 billion investment in the metaverse, the one that made Mark Zuckerberg rename Facebook to Meta Platforms. He was so bullish on the metaverse, he just shut it down. His pet project, $80 billion, is now worth zero. Those complete morons who were spending six figures to buy digital real estate in the metaverse next door to Snoop Dogg have lost all their money, as they should. Just like the clowns who were spending $500,000 on a JPEG of a monkey have lost all of their money. Crazy valuations and lofty stuff does eventually come back to reality. And, this is what's going to happen. So Meta's a big company. It's down 33%. If you like it long term, sure, great stock, good time to buy some value maybe. They're a massive advertising platform. It's not going anywhere. I'm on the stupid Instagram every day, even though I hate it. But, they make big mistakes too. Costs. Yes, this is interesting. Okay. Small cap stock ripping off the lows, up 200% since January, through all the supply to last year. All that looks great. Coming in, clear resistance right here at $3. Nice, big, shallowing consolidation up here. This looks amazing. Yeah, I love it. Little guy. Okay, so probably not going to have a ton of institutional buying. ADR's 8.5%. Can you see that? What does that mean? It means the average daily range. On average, an average day from the lowest price the stock is to the highest price, on average, 8.5%. That's a big range. I mean, if you look at like an Apple, 2%. You look at Walmart, 1.9. So here we have a stock that moves on average 8.5% low to high. So what does that mean? Well, it means it breaks out and has 2, 3, 4 average run days. You could see 25, 30% move in a week or two on this stock. Are you going to see that in Walmart? Probably not. Are you going to see that in Apple? Doubtful, unless some massive new development comes out. They figured out how to make iPhones for $50 or something. So yeah, this looks really good. Great pick. Love it. In fact, let's set up a buy on it. Now, where would our stop loss need to be on this one? It's a bit more volatile. I would want my stop down here beneath that swing low, about a 14% risk. If you want to put it tighter and get it, you could do it at like 275, risk about 9%. I think on a stock that's up 200% since January, you want to give it a bit of room. So let's call it 15%, okay? That's going to be a stop at $2.55, 56 cents. So the way you would place this trade, and I'm just going to do it for like 1,000 shares to show you, you would do a buy stop order, meaning buy if and when it hits this price. What are the highs? The highs here are 302, 301, 301. So let's just call it like 303, okay? That'd be the breakout. Maybe we'll do 305 to give some room. And then our stop loss, we want down here, what do you say, about 257, 256? Okay? And then I would set that order good till cancel. That way it doesn't disappear. So what you've done is set a buy stop order that says, if and when Cosmos Energy hits $3.05 a share, buy it immediately at the market. Okay, if you want to make it 304 or 303, we can just do that. And if and when it fills, and I have my 1,000 shares, I then want you to put a stop loss in, a sell stop order here at 256. So if I buy, then that's where my risk is. So I'm going to risk 15% on this. I'm good till cancel. Let's go ahead and buy. It was a tiny position. All right. I'm just taking 1,000 shares, $3,000. But I just want to show you how I'd place this order. Because apparently buy stops and limits and all that are kind of confusing. And they are when you're just getting started. But this is how I would place that. Okay. Yeah, good pick. I like it. IAUX, one of our insider trades. Yeah, I mean, we're doing pretty well on this thing so far. Come on, go away. I'll get that off. There we go. Technically, it's not the prettiest picture. We bought because the insiders were buying heavily way down in here. We're also still long-term bullish on gold, but yeah, still looks strong. YSS, did we look at that one? That's the new space stock. We looked at that. Let me scroll down the questions. Okay. Oh, METU, not Meta. Okay, sorry about that. METU. Direction, daily bull. So, as bad as Meta looks, you want to go double long Meta? I mean, there's no way in all of hell I would buy this right now. Absolutely no way for me. OLN. Yeah, looks great. Really, really good, actually. What is this? Process Specialty Industrial Specialties. Oh, chemical company. Okay. Trichloroethylene, carbon, tetrachloride. Okay. Yeah, so this is just about a perfect stage 2 breakout. Dude, I like this one a lot. All right, so there are stages stocks go through. In fact, let me show you this, okay? I'm going to do this in 60 seconds. So new guys, like, you're like, oh my God, not the stock stages again. But if you're new, you need to understand this, okay? Stocks go through 4 very distinct stages. And just screenshot this so you got it for later. These are the 4 stages of the stock cycle. Every growth stock in history goes through the same process and do it over and over and over again throughout their life. Stage 1 is the accumulation stage, when big institutions and firms are building up shares on the cheap. Stage 2 is the markup phase, where the stock is in demand and sales and profits are growing and everybody's buying it, and it makes a big run, holding that red 50-day moving average. Stage 3 is the distribution phase. This is when the big institutions begin getting out, the stock's reached its value, sales are shrinking, whatever, they dump in mass, and they're out of the stock. And then once that consistent buying pressure in stage 2 is gone, once the institutions are no longer buying it up day after day and week after week, the stock enters a stage 4 markdown phase where the average leading stock will fall 50 to 80% in stage 4. And they will repeat this process over and over and over again for the next 50 years. And if you go back and look at a chart of Apple or Google or Microsoft or Monster Energy and put it in logarithmic scale, you will see this same cycle repeatedly every 3, 5, or 10 years. Why did I just bore you with that graphic? Because that's what I see here in OLN. We had a small stage 1 base over here, post-COVID, a beautiful stage 2 run higher. After that, we had stage 3 as it began selling off here, and then it kind of held into a kind of multi-year. But then here was the big nasty stage 4 decline, where once again, it held beneath, other than this one little period here, this 50-day moving average. It has then gone into a new stage 1 and has, for the last 15 months, shallowed and consolidated and tightened, and then is now breaking out into a fresh stage 2, where you have the 50-day above the 200, the stock above that, all trending upward, meeting all of our objectives. It's 60% off the lows. Every box is checked here, and this appears to be the beginning of a new stage 2 uptrend in Olin Corporation. So, the best possible trade you will ever take is when you find a stock coming out of a stage 1 base, entering a new stage 2, which should be anywhere from 6 months to 2 or 3 years of uptrend. and you get in tight on a daily chart, like is in here, where you buy, it's not perfect, but you see that shallowing. Right in here as it emerges, you get into this stock where you can risk 4, 5, 10, 15%. And you ride this thing back for 100, 200, multi-percent higher. So OLN is checking a lot of boxes here. I like this one a whole lot for all the reasons I just laid out. Does that make sense? Questions on that? And there's about a 10 to 15 second delay between y'all type something and I actually see it on my computer. But is there any questions on that before we proceed? Because I want to make sure we understand. And yes, absolutely, please adjust your stop loss on the way, right? I mean, that's the initial stop. I'm buying at 27. It goes to 30, 35, I'm raising my stop. It goes up 40, 50%, I'm going to sell half and raise my stop again. It goes up 70, 80%, I'm going to sell a few more shares. Or maybe when it consolidates again, I'll add back on for a new breakout, right? Taking profits and adding back in along the way. Your opinion on the VWAP, the volume weighted average price. I'm not a big proponent. I've tried to mess with it before. I think it has a lot more value for day trading. But I just don't use a ton of indicators. HBM, Hudbay, yeah, still looks great. I mean, we called this one out. Was it last week or 2 weeks ago? 2 weeks ago about the buy point in Hudbay Minerals. And I showed you this because we bought this here in our Alpha Stock service. And I said, my favorite place to buy is here. A leading stock, say mineral and metals play in a massive uptrend, in a leading stock, in a leading group, in a strong market. We bought, it surged. And then Trump decided to go to war. And supply chains got kind of messy. And inflation looks like it's heading up. And we don't know what's going to happen. So the thing rolls over along with everything else. Look where it stopped. Right there at a perfect retest of the initial breakout area. And so I said, this is a great place to buy. Risk 8, 9, 10%. And if you did, it has been a great place to buy because you're up 18% in the last 3 weeks, which is pretty damn good considering everything else is down over the last 3 weeks. But yeah, looks great. Love it. And I hope you took it. And listen, somebody else brought this idea to me, okay? I'm not trying to say, look how smart I am. We called the initial buy, but somebody else brought it up and said, actually, yeah, it's a great buy point. DXYZ, yeah, this is a Destiny Tech. It's the one that owns a bunch of private companies, primarily SpaceX. It's extremely volatile. I don't see a short-term setup in it. This is a 15% up day. This is a 25% run in 2 days, followed by, it's very, very whippy because this thing's almost impossible to price. What the heck is 2.7% stake in SpaceX worth? I don't know. It depends what they IPO at. What's their stake in Stripe and these others worth? I have no idea. We'll see in the funding round. So it's very, very susceptible to emotional swings in price. I mean, you look here, this thing went from 15 to 80, and then all the way back down to 20 in a span of 3 months. If you want exposure to SpaceX, a great way to get it. Just try to buy low in the range somewhere. But is there like a nice, clean technical setup? No. All right, let's look at a couple others and we'll end the session. VG, yeah, Venture Global looks really good. And again, you notice it went. This is why you got to be careful with supply. I talk about everything in terms of supply and demand. All the people. Now think about what's going on here. This stock from 7 to 10 to 12 to 14, 15. It's soaring, right? And some people, I've just got to have some. And they buy it over here, okay? That was last July. Since that point, they have been down 40, 50, 60, 70%. And what do you do when your stocks are down 60, 70% and it finally comes back to where you bought it? Oh, I'm out at break even. That's the entire mentality. That's the whole reason that stock stopped. I guarantee you'll see this hundreds of times throughout your trading career. When there's an area it stayed at for a couple of weeks or months, it goes into massive losses. When it finally returns, people will take advantage and sell there. So that would have been my sell target for the stock. In fact, I think it was when we got the breakout here at 10. Oh, yeah. Well, I said this alert already. So see the alert I had here, and I guess it triggered, but I had it saying. Let me just show you. Come on, give me that. Well, I set this alert, uh, and put what do we put? Well, I don't know if you can see it, but anyway, it says 1018 possible breakout from IPO base, like I talked about before. It's that first little IPO base, and here is another one. Maybe this was the old alert over in here. But see how, like we talked about, that's how these IPOs do. You get a colossal dip, and then you wait until that supply finally gets absorbed and tightens up, breakout, retest, and it goes from 10 to 20 in about 30 days. All right. This is where some of the big opportunities are. You just have to be extremely picky. You have to wait till you see these really clean setups. All right. All right, guys, it's supposed to go an hour. It's been an hour and 20 minutes. Let's go ahead and end the session here. I can look at stocks all day long, but at the end of the day, I want to try to teach you how to do this on your own. Now, we do these every single week. The Monday sessions right now we're doing live over YouTube. If we get another strike, I don't know why I got the first one. Um, there's risk involved. You can lose money. I'm not trying to say you can't. I want you to be able to trade with low risk and trade as tight as possible. But if that happens again, they will move back over to Zoom. So you won't be able to just log into YouTube and see them. So if you're not already a member, go to tradewithross.com to get signed up. You can even scan that QR code on the screen. It's $5 for the entire year. And you'll get these hour-plus long weekly sessions twice a week. You'll get access to the industry strength indicator, which you can put on your charts and have that for life. You'll get the weekly newsletters, some bonus reports, a ton of stuff. And folks, if you're not happy, call me. I will mail you your $5 back. Okay. Otherwise, I'll see you all next week. I am optimistic that this will come to some sort of conclusion fairly soon. Once it does, I believe the market is going to release this coiled energy we've been sitting on for months and months and months and months. And there's going to be some huge opportunities going forward, just like we saw in the energy space over the last 4 to 5 weeks. But if we remain calm, focus on the leading areas, the leading stocks, wait till conditions are good, that's when the risk reward makes the most amount of sense. And that's when you can get some big returns fairly quickly without taking big risks in your account. All right. So click the link to get signed up. Otherwise, I'll see you all next week. Thanks, everybody.